introduce myself. My name is Zsolt Darvas. I'm a senior fellow at Bruegel, and I'm very pleased to chair this session and the concluding panel. Alicia already indicated in her introduction that this panel will be about the impact on the EU, and indeed he and Zhuawei Zhu, I'm again sorry, wrote a nice paper on the impact of Russia trade relations on Europe. So they will present this paper, but let me also briefly introduce Alicia because she didn't introduce herself. So she's a senior fellow at Bruegel, but beyond that she has many other positions. She's based in Hong Kong at the moment. And she had many positions at different organizations like the BBVA, the BIS, at the Bank of Spain, and also advising the European Central Bank, at Banco Santander, and also at the IMF. And his discussant will be Matteo Governatori from the European Commission, who joined the Commission, I think, in 2004. And he worked for different DGs, and currently he's mainly dealing with China, Central Asia, and Saudi Arabia. So, Alicia, the floor is yours.
Thank you so much. Has written, to be frank. But we've been discussing this topic for quite some time. In fact, we wanted to have this conference on China-Russia relations with the whole idea of analyzing what could be the impact on Europe. So basically, sitting from Hong Kong, I feel that China-Russia relations are strengthening. I always feel that, okay, what's the impact on Europe, because Russia has been a major trading partner for Europe and also strategically important for Europe. So this was a question that was really in my mind, and I discussed with Ika, of course, Buffett about this, since they are such experts in Russia and also China. So that's the kind of the reason why we wrote this paper. Now, the problem is when you start discussing China-Russia relations, economic relations, it becomes really very political, and so think about the Shanghai Cooperation Agreement. Since 2001, Russia and China are sharing, major roles in this Shanghai Cooperation Agreement, and which is expanding, and we have Pakistan, a succeeding country, and so there's a lot of issues that go beyond whatever we can show you here, because this is an empirical study of trade relations, which is only part of the story, frankly speaking. But because that's all we could do really in the available time, and also given our expertise, that's what I'm going to show you. But I wanted to really open the floor, that's why I'm doing this introduction, about any comments, questions, or ideas you have on the impact of China-Russia relations on the rest of Europe beyond trade. And I'm sorry to say this to the discussant at this point in time, but I'm sure we'll have a lot of help from the audience, because he only got our paper, and our paper is very narrow. I want to downplay what our paper can really answer to this question, but we do have some ideas in the paper based on this very narrow topic, which is trade. How China increasing relations, which, as I will show to you, between China and Russia, trade-wise, impact Europe. That's the only thing we are trying to do here. So this is the outline, some background, which I've already started. And the whole idea of the paper is really, so this in this trilateral relation, where is the competition? Where are the complementarities? And I think after the wonderful papers that we had already, you probably already know where they are, because you already have the background as to who competes and who doesn't. But we're going to show you that literally you're a priori, in a way, in the data, in what we found. yeah, so that's all. So first of all, so for Europe, and the whole paper is, thinking about Europe, China and Russia are really major trading partners, and that's the first thing to take into account. So Europe is Russia's largest trading partner, and China is a major economic competitor. In a way, for Europe, maybe we could talk about not only competition. I'm sure that, for our representative of the Chinese embassy, maybe better say, cooperation. But the reality is that we are both large, major exporters, if you think about our huge current account surplus, both in Europe and in China. So in a way, that's what I mean by competitors, that we are large export engines in the world with huge export capacity. And that's how I understand this idea of competition in this paper. That's all I meant, nothing else than that. So the paper, of course, because this is a triangle, we need to look at two questions. First is, and again, from the perspective of Europe, where we are sitting now, so how do we compare ourselves with China into the Russian market? That's one question. The other one is, how do we compare ourselves with Russia into the Chinese market? That's how we kind of shape the paper in those two markets for Europe, be it Russia or China. And that's why we show here, so EU trade with China and EU trade with Russia in those two graphs. So basically what we're seeing here is that in both cases, so EU trade flows are, more imports than exports, but with a difference. In the case of Russia, our trade deficit is narrowing, and in the case of China, it's increasing, at least, in the last few years. That's the only thing I want to show here. And then there's, of course, major events, as you can imagine. So in EU-Russia relations in particular, with the Russia-Ukraine gas dispute and the annexation of Crimea, and of course the sanctions thereafter. And that does shape a little bit our results, as I will show, of course, no doubt that they do. And then on the side, the increase in economic relations between China and Russia. Okay, so I guess I need to learn how you did it before. So without...
You need to turn the
okay, I need to. Okay, so... Well, this is just for those, it's not up to me. I'm just a humble economist, not a political scientist or whatever, and I don't want to bother you too much with history. But I do want to comment that if we had no background, historical background, this question would look kind of very simple, because gravity, well, maybe not because of the capitals of both, but these countries, China and Russia, are neighbors, and literally so, and with a huge border. So you could argue, of course, they are integrating. Why not? That is logical. But the reality is that their historical relations are pretty complicated, and they've only improved recently. So I just wanted to make this strong point that what seems obvious wasn't obvious until quite recently. And that is, I think, why Europe, and I want to go a little bit beyond the empirical results, if Janwei allows me, this is why this strategic partnership has, in a way, been, to me, not so observed, if I may say that with your permission, in Europe. It's like we are a little bit surprised by this increase in economic relation between China and Russia. And it's all down there by the fact that those relations were historically so difficult. And we've kind of missed the steps in between. Shanghai Cooperation Agreement is a clear one on the security side, but there's many economic steps that we've kind of missed. Or I don't want to say missed maybe not the Commission, I don't, but generally, I mean, the public as a whole is very surprised about this increasing relation between Russia and China, and quite reluctant even to accept it somehow. I feel in different fora that that I've been to, that there is this sense of what's happening now, and it's actually been a while, but it is true that against a background of a very difficult relation. So that's what I want to strengthen, which will be shown in the data in a minute. So now, the paper we could have actually conducted, and Jianwei can actually explain this much better than I, so Jianwei, I give you the floor anytime you want on this, but when we were discussing this, I had in mind a very simple analysis, like just look at exports. And Jianwei convinced me, no, Alicia, that's not the way to go. You need to look at the economic structure and domestic production and take all of that into account. And he drove me through very complicated models that I don't understand. But the reality is he has a point, because when you look at the size of the domestic economy as opposed to the exports, the picture is a bit different than even what we see when we look at protectionist measures and so on, meaning, to Laura's very interesting point on Russia being very protectionist as opposed to China. Actually, what I see here is that Russia, in a way, maybe reluctantly so, if I may, given your figures of protectionism, but reluctantly, but more open to the rest of the world, because the share of imports is larger for its economy, as I show here. Yeah, this thing here, it's behind the orange part, as opposed to China. So in very simple terms, 15% of Russia's size of the economy, if I may, is imported. But in China, it's increasingly, is always less, or stable, but compared to, so they do if I may put it very bluntly, they do everything by themselves, because of course they are moving up the ladder, they can produce more stuff. I'm not saying this is because of protectionism. I can't say that because I don't know. Or according to Laura, actually not. But the truth is that they need the rest of the world less than Russia, according to these figures. And that's actually very telling for what the impact may be on Europe. Because you have an economy that imports a lot, Russia, for which you are the largest trading partner. For China, you aren't. And you used to be, no longer so, but but the reality is that their need for you is less. That's the starting point of this paper. So where I'm supposed to look at, I don't know. The lady there, okay, it's like magic. I look at the lady and this moves, but no. Okay, so maybe?
No.
Okay,
No.
The problem is if I go too fast, then nothing happens. Okay, here you go. So this is looking at the import competition from the EU into Russia and China, but I'm focusing now on the import share of the EU on Russia and China. So these are top 10 imports from the EU in China and top 10 imports from Russia in China. So basically, what does EU export to China, in other words, and what does EU export to, what does Russia export to China? So that's where we start seeing, and I'm not challenging, of course, that maybe Russia does export 6% in manufacturing, but when I look only at that universe, so Russia into China, as opposed to EU into China, they already look very complementary to me, meaning Russia and Europe. That's not where the problem lies, because we export very different stuff into China, very clearly. And I find it very difficult to see a change. We were talking about nuclear as a major sector, maybe, where we could see potential competitive power, if you want, from Russia. But you actually see that it's Europe exporting nuclear reactors. the nuclear reactors, the third from Russia into China is very, very small. So maybe, but that's not what we see so far in the data. And so in other words, you see Europe exporting very up high in the ladder into China, and Russia exporting literally is like a one good economy as far as China is concerned. I'm not saying that's maybe true everywhere, but that's what we see in these figures. And not only that, Russia is still today and very stable, quite small, a small partner, at least as imports are concerned, for China, but Europe is still very large. And that's what you see in this figure here. So about 20% of total. But of course not the largest. It used to be, but no longer so. Now, this is looking at Russia. As I said, the other question in the paper is so kind of complementarity, at least that's what the figures show, for China, Russia, Europe, into China. Now, what about China, Europe into Russia? The second question. And that's where we start seeing that, you know, we're entering shaky waters for Europe, because that's where we see clear competition, at least sector-wise. So what we see is, yeah, the pointer, but it doesn't go beyond. Okay, so nuclear reactors. Number one from EU into Russia. Boilers, machine is not only nuclear reactors, let's face it, but anyway, when I look at the same sector, it's number two for China already. So it's about the same. Maybe you can think about whether it's the same quality, whether it's the same, I don't know, but the truth is that we're starting to see the same sectors as we move along. Electrical machinery, number three for Europe, number one for China already. So it's already quite similar. And most importantly, when you look at the import share of the EU into Russia, the orange, and then which used to be very, very large, 70% moving down to 55 or something, and you look at China starting from barely 2% already at 20. So it's very fast. It's really very fast. So in a nutshell, China is taking market share very clearly. From whom? From Europe, because it's the largest trading partner. So, you know, I don't even need to run the regressions, but Jiang Wei insisted. So we did it. But frankly, this is very telling already. So, yeah, so this is what he did. So basically, he kept on saying, we need to take into account domestic production, which we did. That's why we went through that hell, or he did. And to really estimate a good elasticity of substitution. That's our key concept in the paper, to really assess whether these two countries, of course, controlling for the rest of the world, do compete or are complementary in their trade into Russia or China. So this kind of triangle. And what we find, so basically taking into account the market share value, that's the key point to use this methodology. So, yeah, whether I'm the most useless here or my position is the worst, I don't know. I need to, okay. So,
there's a miracle effect that sometimes if you fire it back to you,
okay, so,
into the room over there, and
okay.
the power of physics will be your
Okay, so that's the magic. I'll do that. Okay, thank you. So these are the key results I'm going to show you now. So as I hope you all expected, based on the previous papers and what I just said, the EU and Russia are complementary, according to our results, in the Chinese market. So that's no issue for Europe. And as shown by the negative and highly significant elasticity that we find in our results for our sample. And however, EU and China are substitutes. I mean, they compete basically in the Russian market. And as you see, it's a very high coefficient as well. So elasticity above 1. So then we thought, okay, is this more the case now than before? So rolling regressions, yes, indeed. So this calls for, although we can't prove that, but as Europe became more, put it this way, stricter with Russia, to say the least, China probably liked it, to say the least. So this thing has only accelerated. That elasticity has only become higher over time. By the way, and when I look at Europe against the rest of the world, just to show you, that elasticity, no significance. So this is a pretty strong thing because we don't find the same for the rest of the world. Of course, that's a very general concept. We're not looking at bilateral relations, but I'm just saying it does show that this triangle, there is something happening in the Russia market that is not happening elsewhere, very clearly. So he said to do this, I'm not sure. Oh my God, that's magic, no? Yeah, okay. So now, of course, we had, as I showed you, sectoral data. So we used our sectoral data to kind of answer the question, is this, the issue of competition, is it general or is it just within a sector? Which I think is also very telling for the story because if it's really within sector, which is what we find for the competition in the Russian market, is even, we should be quite worried in Europe about this because it's really within the sector that you already have. So in other words, we could compete, but in a way we could compete in sectors where we feel comfortable with. So low skill sectors, so China, yes, compete, but we still are here. And in those sectors, we don't feel the pressure. But the results show that we are feeling the pressure in even very strategic and important sectors for Europe. That's what we're basically seeing here. So that, and the complementarity is not, of course, driven through a sector because the complementarity comes from the fact that we export in very different sectors. So that's a no-brainer. It's only the first result that I think is very important. So the good thing, it gives me time to think this idea. So evolution of the elasticity of substitution, as I mentioned, we did rolling regressions, meaning we wanted to see how this parameter would evolve over time. And I found it very appealing that, of course, the substitutability between EU and China and Russia in China, which I said was negative, meaning complementarity, is either stable or, but it's of course negative, but it's negative since 2008. So something must have happened in the structure of the Russian economy, or if not in the European economy, but I rather think it's the former, that has made Russia and Europe more and more complementary, i.e., but I can't prove this, more dependence on commodities, be it because of price or because of volume. Laura already answered that question, probably it's only the price effect, but no matter how, it seems that complementarity is a relatively recent issue. And more importantly, our sustainability with China in the Russian market, so the idea that we compete, has been there for a while, but it has increased since 2012. That's, yeah, sure, I believe that in a minute. So that is, again, I don't know whether it's our behavior toward Russia or whatever, I don't know, but I see that has only increased in the data. So, yeah, I only have 5 minutes, so please react to my command. Stimulating, sorry, not stimulating. Not stimulating, sorry, I meant simulating. This is a typo. It's a stimulating typo, but it's just a typo. So, so basically, what we thought, John and I, is, okay, but what if Russia and China, beyond the Shanghai Cooperation Agreement, which is a little bit like on the security side, cooperate on any way or form? Imagine that the Belt and Road becomes a free trade area, or that they have a bilateral agreement, or who knows what. So that they basically reduce their import tariffs massively, and we make an assumption just by reducing bilateral export prices by 20%. As simple as that. We don't know whether that is by any means feasible, but that's our assumption. And we end up finding that by them, these third markets for Europe, increasing their economic cooperation through reduction of tariffs or any other means, which would reduce export prices for them, Europe would lose as much as 4% of its exports into these two economies, mainly to Russia. So when we compare, actually, we've been debating this, but the impact on China is slightly positive, and there's a reason for that, but it's slightly positive. So everything is on Russia. So we would lose additional market share in Russia beyond what I've already shown you that has already happened, from that 70% to less than 55 or about 55. So that would be the impact of such economic or trade cooperation for Europe as a simulation. And of course, this is, as you know, this is just many caveats. This is ceteris paribus. I mean, we don't really know whether that will be the impact. But it does sound plausible that Europe will lose if China and Russia engage in a free trade area or any other trade agreement, basically. So in conclusion, our paper only focuses, as I mentioned, on a single question, which is trade, sustainability or complementarity, by estimating the elasticity of substitution. And we find that the China market is a no-brainer for us, sitting in Europe, meaning Russia and Europe do not compete. So that should not be, quote-unquote, a policy question for us. The key policy question is the Russian market for Europe. That's where the Chinese competition seems to be fierceful within sector, as I mentioned. And not only that, if they were to engage in any kind of trade agreement, it would only get much worse, according to our results. So I guess that's all I was going to say, and I'm on time, I believe. So thank you for your time. Yeah.
Thank you. Thank you very much, Alicia. Your paper, I think, provoked a lot of questions, and that hope we will discuss. But first, Matteo may have some comments, and I believe you have slides too.
Indeed, I have slides.
So again, you will need to
struggle with this device as well. So, okay, thank you very much. First of all, thank you very much to Bruegel and also to BOFIT, to ICA for having invited me to this very topical, very interesting seminar, for having asked me to act as discussant. Just before I start the specification, I did mainly Russia desk rather than China desk within the global economy unit in DG ECFIN. Okay. I enjoyed very much reading this paper, and I hope I can provide a couple of useful comments. So it seems to be working relatively well. Okay. Somehow already the speaker, Alicia, put it in a broader perspective from the beginning of her discussion, contrary to the presentation of the paper, which, as you said, is very much focused on this trade issue and the substitutability. Indeed, I try to summarize here the topic of the paper. So the idea is indeed, as you emphasized pretty much, is this substitutability versus complementarity of the EU versus Chinese exports in Russia and the EU and Russian exports in China. So the whole paper revolves around this concept, which in the end is relatively intuitive. So I like this balance between the econometrics, but also in the end the intuition of the results. And it's interesting also having combined both the aggregate and sectorial level, so this cross-sectoral aspect and the within-sector competition or complementarity. Let's say in terms of tools, is the estimates of this elasticity of substitution is the key tool used to investigate the topic, and from there there is an attempt to draw conclusions on the effect of enhanced Russian and Chinese trade ties basically on our exports to both markets. And in the last line, I try to summarize the key results. Basically, we would have, following an enhanced trade ties between China and Russia, a loss of 4% of our exports cumulative, as Alicia underlined, to both markets, and also translating into minus 1% market share in Russia, and basically almost no effect, or actually a slightly positive one, on our share in China. Perhaps later on I will give some comments on these numbers. But first, let's see. Okay. So first point, why I find this paper, and I would say the whole seminar, to be particularly relevant, because it touches on an aspect which is, in my view, a bit neglected in the whole current debate between between the bilateral economic and political relations between Russia and the EU. Because the current debate, particularly when we talk about sanctions, the counter-sanctions, and their impact, is basically on the direct effect of the sanctions on the Russian and the EU economies, respectively, looking mainly at the bilateral economic links, so trade, financial links, tourism inflows and outflows, economic confidence, energy, etc. But there is not much reflection so far on a more indirect effect, which could be a possible reorientation of Russia towards other regions, both economically and politically, which one could make this hypothesis, completely to be tested, of course, that this might be an indirect long-term effect of prolonged sanctions. And this indeed makes this paper, in a way, and the whole seminar, starting to fill a void, also by providing quantitative estimations on the actual trade implications for the EU. Even more topical, as it was mentioned already, recalled repeatedly in the previous sessions, Russia launched a new narrative, including this sort of pivot to the east, in a way also as a reaction to the cooling of the political relations between the EU and Russia. And this pivot to the east is often, in many Western circles, somehow met with some skepticism, with the impression that this perhaps might be more rhetoric than substance, but still that is certainly a topic which needs to be looked at and investigated against hard data. Let's see. Okay. Now, as Alicia told, basically, I am a bit, in a way, somehow you preempted some of the comments and the numbers, because you are, in a way, repeating a little bit the numbers that you show, that you have shown earlier on the bilateral, on the trade with China and Russia, some basic facts, but still worth basically to remind them. Basically, we have the size of the EU exports and the EU imports from both from and to both Russia and China in the upper charts, and the corresponding share of EU export and EU imports vis-a-vis Russia and China. And, oops, let's see, perhaps, I don't know if somebody can help me. Great, thanks. Let's see. Yeah, the following chart is this one. So basically, I'm somehow it's a good, certainly good starting point to recall the main facts on concerning the trade with China and Russia. So we have a negative trade balance with both. We have, as Alicia pointed out, a stable rising. It's interesting, this dichotomy, if you want, that we have in the evolution vis-a-vis the two partners. We have stable or rising exports and imports to and from China, whereas we have decreasing exports and imports to and from Russia, although there, I mean, there is certainly a price value issue concerning our imports, because clearly the data mask also this huge fall of oil prices regards, so simply the dollar value of our imports, which are mainly skewed towards oil and gas, is decreased. And on the export side, of course, we have the current recession in Russia, which somehow is the main driving force in this decrease of our exports in that market. And also looking at the shares, is interesting to see the difference. In 2015, China accounted for around 20% of our imports, close to 10% of our exports, with the respective figures for Russia being at 8% as regards imports, largely oil and gas, and 4% as regards exports. Already comes up pretty strongly this huge dichotomy between the size of our relationships with these two markets. And interesting, if one does a very simple back of the envelope calculation, this minus 4% lower exports to both Russia and China, which the paper finds, looking at the 2015 data, very roughly, would amount to around 10 billion euros worth of decrease in exports, so probably relatively small compared to the overall scale of our trade, but certainly not peanuts. Now, in my discussion, mainly I would like to see this paper in the broader frameworks of the prospects for China and Russia trade ties. Because now the first question also to see if you want to check the real research motivation of this paper is whether a sharp increase in the China-Russia bilateral trade is likely. And now one can look at a number of relatively simple factors to reply this question. We observe that Russia is still in recession, albeit bottoming out. Perhaps now the latest data lends some support to a bit more optimism than earlier, but still there are large risks of a protracted stagnation. We see the potential growth remain low according to all estimates. The investments are relatively anemic. We have a subdued domestic demand amid a large income squeeze during the past recession. And there is consensus, basically, that the gain in price competitiveness with Russia achieved via a weak ruble does not seem to be sufficient to kickstart exports and growth. And last, there is also an emphasis on economic self-reliance in Russia, such as within the import, such as from this growing emphasis on the import substitution program. So if you put all these elements together, it looks like that the prospects of the incentives for a strong Chinese economic reorientation towards Russia to the disadvantage of the EU seem not to be there at the moment. So this reorientation appears a bit unlikely if you put the discussion in this broader context. Okay. Although there are a number of caveats that one need to quote, we see that in Russia, for example, we observe an increasing emphasis at the highest level on the need to carry out structural reforms. There is the so-called Plan K, which has been in a way announced by both President Putin and Alexei Kudrin. There seems to be a stronger commitment by Russian authorities on structural reform, and one, of course, cannot exclude that this structural reform momentum gains traction. Of course, the economic prospects for Russia would change, and even the incentives for a possible reorientation of China, because this could support, obviously, investment and hence set the condition for production diversification, thus leading also to a greater import demand in Russia. On the other hand, we know that it's legitimate to have some doubts on the chances of success of these reform plan, because in the past reform plans were indeed already devised. They did not fare particularly greatly, and we also have a long election cycle looming in the horizon in Russia, which probably is a little bit at odds for setting the right incentives for doing sometimes even painful structural reforms. On the other hand, prospects might be brighter for individual sectors, and this need perhaps of looking at specific sectors rather than trade in general came up pretty repeatedly, I would say, also in the previous sessions. And, for example, enhanced supplies of Russian oil and gas to China via new pipelines, in exchange, to put it simply, in exchange of greater penetration to be granted for Chinese imports to Russia, although we know that this is subject, as it was discussed previously, this sort of deal would be subject to long-term investment and infrastructure projects to enhance this oil and gas supply, and we understood this morning basically that there is a long way to go in order to have these projects finalized. Now, not entering too much on the methodology, I try to stick more on the intuition so far, but entering a little bit in some more details on the methodology. Okay, I'll try to be quick. I would say that it would be interesting to have in the paper a bit more discussion on these complementarities, on these two aspects, the complementarity and substitutability across sectors versus within sectors. Because the first component is quite intuitive. Okay, the idea is that EU and Russia are specialized in different sectors as regards export to China, so we are not competing there, basically. The problem is that we compete on similar goods with China on the Russian export. So that's where we are going to lose, basically. This is pretty clear. But the within sector, you show basically a pretty complex table with the sector by sector, within sector elasticities, and that would require a bit more intuition and explanation of the different results in the sectors. Okay, the econometric specification, very complex, but the overall idea to me is relatively sound and intuitive. Basically, there is an equation linking market shares with cross-market import prices, looking at past data, and from there you derive this elasticity of substitution. Looks pretty intuitive to me. The evolution over time of the elasticity of substitution is an interesting aspect, and probably that would deserve some further investigations. For example, you try to argue that sanctions somehow changed a little bit the game and triggered this increase in elasticity of substitution. Would be nice to see whether actually you can establish a sort of econometric significant impact, because in the end sanctions did not touch exactly trade, no? Except for something on dual-use goods, arms, and of course we have the counter-sanctions by Russia on the agricultural goods, but their trade is only touched to a minor extent. So it's not so obvious that there must be this increase in the elasticity of substitution. On the simulation, this simulation of the shock of in trade ties looks a bit arbitrary, this minus 20% decrease. Perhaps, I wonder whether one could simulate what happened after the WTO accession of China to see whether you can anchor this shock to something which happened already in the past. And then, very quickly summing up, so essentially, the real risk here, let's say in more policy terms, is whether the EU could be displaced from Russia market by more aggressive China's exports. And, okay, we observed a sharp demand slowdown in Russia, which probably makes this unlikely in the short term. And we discussed that the turnaround in the long term is unlikely because the prospects for the big diversification and structural reforms in Russia, let's say it is legitimate to have some doubt about that. The exports to Russia from the non-sanctioning countries, and colleagues of BOFIT showed that in the morning, including China, fell nearly as much as from the EU in 2015. So it doesn't look like that basically they took a big advantage from the cooling of the bilateral relationships between Russia and the EU. And the EU export share in Russia is relatively low and decreasing, and it looks like the EU member states also managed, this is evidence that we have in ECFIN, that basically managed to divert sometimes trade to alternative markets during the current Russia recession. So, okay, I would say that there is, given all these considerations, probably the research motivation of the paper could and should be strengthened a bit more. For example, by focusing, but here is just speculation, perhaps on the more exposed EU member states rather than the EU as a whole, or pay more attention to sectorial specificities like oil and gas. And given the time constraint, I would end there. Thank you for your attention.
Thank you very much, Matteo, for this very interesting comments, and also on your comments on the methodology and your suggestions on how the work could be developed further. Now let's Alicia and Joan may open the floor, I think, for questions and comments, and then when you respond, you will be also able to respond to Matteo's remarks. So let me open the floor, and yeah, Ika, please.
Okay, Ika Koronen from Bank of Finland. A question to Alicia. You said that there seemed to be a break in 2008, but then you didn't want to speculate on the cause of that. Is it possible that the global financial crisis, when it threatened to hit China, of course there was massive fiscal stimulus in various forms, and it seemed that in many sectors you actually then had increase in capacity. Yeah. And then that increased capacity in later years sort of turned up also in Russian markets, among many other places. Of course, that's speculation unless you back it up with data, but then you could look at the sectoral composition of exports, which increased most, and if you can find a corresponding increase in capacity in the 2008-2009 period. Thanks.
Very good.
Thank you. There was mention of different sectors. I'm particularly interested in the service sector. The EU has enormous potential there, and in general, the part of trade and service in the whole world trade is very low still. So most of the GDPs are at a much higher level than the trade in service actually. How far would the trade in services be a negative factor here? Because China is very weak in services. EU is very strong, and as far as I know, Russia is weak as well. So here in the long term seems to be the main sector for the EU, not only to keep up its export, but to increase. How is that seen in the various data you have in your presentation here? Is there some way to see the service sector separate from the others? Thank you.
Thank you. Another question or comment?
Yes.
Yes, please.
Well, of course, prices were mentioned as an important element, but I'm a little bit concerned with the issue of misinvoicing. In the Chinese case, we know that Chinese trade is, well, badly misinvoiced. So to what extent is this true with the trade between China and Russia? And if so, what's the margin of error? Is it constant over time? Is it time varying? So what's the sort of confidence interval around your estimates?
Thank you. There was also a question there.
Thank you, Esther Zanan from EU Observer. I would like to ask, how do you think that the possible or likely rollover of sanctions on Russia will affect these trends? Will it strengthen? It hasn't happened yet, but the possible rollover of sanctions, how would that affect these trends? That would be my question. Thank you.
Yeah.
Thank you. I think it's a point very well taken that the market share of China in Russian market has been increasing, and it certainly so. I was wondering, are you willing to speculate on how much of these increasing trade between Russia and China is a result of the conscious policy steps that you showed in the beginning of grand plans on various issues, and how much are we actually discussing a more global phenomenon of the role of China increasing everywhere. And the fact that in many sectors EU companies are facing stiffer competition from Chinese competitors everywhere. And so in that sense, Russia is just an example of what's happening globally.
Very good comment. Now, let me give the floor back to you, Alicia and João.
Yeah. So maybe, John, do you want to take any specific question or? Okay, thank you. Thank you for your help. No, but it's okay, because they were mainly not econometric. Otherwise, I will just refuse to answer. But anyway, so a few comments. First of all, Matteo, thank you very much for your comments. They were very helpful. I think this idea of within-sector complementarity substitution really will go through that, because the data is there. We need to explain that better. But other than that, as I said, we'll explore. I think we could also look at breaking points in the increasing substitution between Europe and China into Russia. I mean, whether part is sanctions or whether it's a fiscal stimulus package. I think on that account, I mean, yes, maybe sanctions don't have it's not directly affecting trade, but frankly, I think for me it's very hard to argue that it would not affect trade, because, through many indirect channels, and also simply imagine all of the purchases, of machinery or inputs from any company that, you know, related to the government, I mean, I would react also that way, frankly, if I were. So it's very human, if you want, maybe not imposed, but very human to react. So it's in a way another counter, if you want, sanction type of behavior, if not a counter sanction itself. But yeah, the problem, of course, that our data is not high frequency enough to really evaluate that, and this is only a recent issue, it's 2014, so it's hard to measure it properly. On the 2008 breakpoint that Ika was referring, which is related to this, I think there's two issues. I think on imports, Chinese imports from Russia, I would imagine that this is very important. Why? Because basically growth actually accelerated in China compared to the rest of the world. So China contributed to global growth. It was basically close to 1/3 of global growth, 33% of global growth in 2008, 2009. So that's where China kind of it becomes the key engine of the global economy. So I can imagine that compared to the rest of the world, demand for energy in China would be really like overwhelming. I mean, and therefore imports of, say, gas or from Russia would have ballooned, simply because the rest of the world was not, you know, in its shape to demand anything from, or even especially energy. Also because that stimulus package was investment driven, so more so very energy intensive. So that's why I think for Russia exports into China, surely. For Chinese exports into Russia, which was your point of overcapacity, I think what we've analyzed in different, not in this paper, but elsewhere, that is only the starting point, if you want, of overcapacity. That's why I don't think that's what it's not really a breaking point, because at that point, the Chinese economy was actually overheating, meaning there was not really, like, you know, as of today, negative producer prices. The overcapacity, in a way, is a consequence of that boost in production from 2008, 2009 onwards, that excess investment then. So I don't think that is behind the increase in trade with Russia at that point in time. It may be behind the future increase in trade or the current increase in trade with Russia. But I don't think that, so there is a time lag, in other words, for that excess capacity to explain Chinese exports into Russia, to your question. And the service sector, we don't include services here. Is that correct, John? It's only goods export, so we really don't have an answer. Although your point is absolutely well taken. We could discuss, maybe I'll leave it to John Wei to talk about services and what China is expecting to do with services, because even there we may face some, you know, competition threat in not very long. Think about tourism, they're in a way capturing the market at the source, yeah, through outward FDI. And also they're becoming an increasingly relevant recipient of tourism. So even there, that's only tourism, but anyway. Yeah, of course, also. Yeah, they're a major lender, think about Russia or the rest of the emerging world. So they are also exporting services increasingly. But that's, we didn't really analyze that. And then the impact of a rollover of sanctions, I think maybe Matteo can comment. I don't know. Well, we had a discussion during the break. So if I follow although I don't know whether my results are, that increased in the competition is based on sanctions. It's just, it so happens at the same time, but I can't prove. Therefore, I can't answer your question. But if that spurious correlation that we find were to be true, the answer would then be, yes, more market share will be lost towards China from Europe. But I can't prove that. And finally, very importantly, is this just Russia? Again, we don't know because we've not done the same exercise for the rest of the world, but from different research I've conducted with other co-authors on the role of China in Africa and the role of China in Latin America and comparing the two regions. Of course, this is certainly not a Russia-only story. The only difference, though, is that Europe was not the largest trading partner in Latin America, or for that matter, even in many of the African countries, maybe only in a few of them. And by the way, the size of Africa for European exports probably wasn't, as high as Russia. So what I'm trying to say, yes, maybe this is a global trend, but it does affect Europe differently. So this is more of a concern than maybe what we see happening elsewhere. And that's why we brought it to the table, because I think it's also the concept that Eric introduced, which I think is very interesting, this idea of strategic interdependence. So it goes beyond, we only focus on trade because that's all we could do. But frankly, this is more, in my opinion, a more strategic issue for Europe than, say, China's increasing relations with Latin America or Africa, for that matter. So that's why I think it's at the core of, should be, and I can't agree more with Matteo, at the core of our discussions, because this is really, our space, if you want, and we see this as a very interesting, but maybe not threatening, but kind of worrisome trend if you think about Europe as an export engine. So I leave it there. I don't know whether I missed any questions, but otherwise, just let me know.
Yeah, thank you very much, Alicia, for your. I think you tried to answer very carefully many of the points. We started about 20 minutes late, and we also ended the session about 20 minutes late.
Oh.
So we now move right now to the policy panel. Now, many policy issues have been discussed so far, but I'm sure that many more questions can come to the floor. And we have 4 excellent panelists. So let me introduce them alphabetically, but we ask them to speak in a different order. But first introduction. So Alicia Garcia Herrero. I already introduced you before. Then we will have Vasily Gavrilkov, who is the first secretary of the permanent mission of the EU, of Russia to EU. Then we will have Ika Korhonen, who already spoke a number of times, and he has been with BOFIT since July 1995. I have to say that the first time I visited the Bank of Finland was August 1995, so it's already almost 22 years since we know each other. So, and he has been the head of BOFIT since 2009. And then we will have, last but not least, Ming-Si Sun, who is currently the Counselor for Economic Affairs of the Chinese mission to the EU. But let me mention that he also worked for the Chinese representation in Helsinki. So he also has some connections to Finland. So we discussed that we will start with the 2 representations. So first with Mr. Gavrilov. And I asked each panelist to speak about 5 minutes on whatever policy topic they deem relevant to the subject. So, Mr. Gavrilov.
Thank you, Rod. It is always a pleasure to speak of Russia-China relations, because fortunately we do not have any political problems in our relationship, and China is a truly strategic partner for Russia, and we have a comprehensive interaction on various issues, on foreign policy issues, and we have, of course, a very extensive and wide economic cooperation. And it is we see having China as a neighbor as a real advantage, because we know we can have both Russia and China can get some economic benefits from that, and political, of course, as well. As the Russian President Vladimir Putin has put it, our relations are at an unprecedented level indeed, and we have a very active political dialogue. For example, our leaders met 5 times. Last year, President Putin is to visit China on the 25th of June, to start his visit, at least on the 25th of June. This year, there will be another meeting of our Intergovernmental Commission chaired by our 2 premiers in September, as far as I remember. We have many mechanisms for cooperation. We have 4 commissions for trade and economic ties, for investment projects, for humanitarian issues, and for energy, of course. We cooperate very well in this. At the Security Council, we always stress the central role of the United Nations. And we stress the need to respect international law and the principle of non-interference in internal affairs. And indeed, I think that Russia-China cooperation on foreign policy issues has already become a very important stabilizing and balancing factor in international environment. For example, we have very similar positions on Syria or on the problems that are present at the Korean Peninsula. And we also have a very strong cooperation in the BRICS format. We also have a trilateral format between Russia, China, and India, which is a quite effective one as well. We interact in the framework of this Shanghai Cooperation Organization. And of course, we have, we believe, very good prospects for cooperation between the Eurasian Economic Union and China, and there are discussions about an agreement on trade and economic cooperation between the Eurasian Economic Union and the People's Republic of China. And all the leaders of the Eurasian Economic Union have already expressed their will to proceed with this initiative. And besides, I also want to stress that in December last year, the Russian president has proposed an initiative to create a common economic space between the countries of the Eurasian Economic Union, of the Shanghai Cooperation Organization, and the ASEAN countries. We could create, as a first step, a free trade zone between Russia and the ASEAN member states. Now let me come to our bilateral trade with China. We saw a decline, as it was said in the previous sessions, but now trade has been improving, and we already see some positive trends this year. And I want to say that China has been the first trading partner for Russia since 2010. And if the oil price would stand at least $80, we would already have exceeded the volume of trade of $100 billion between Russia and China. We have been building a very strong alliance in the energy sector. There is an agreement between Russia and China to construct the pipeline, the Power of Siberia, the so-called Eastern Route, which will provide up to 38 billion cubic meters of Russian natural gas to the Chinese economy. And, of course, it would also assist in improving the situation when it comes to ecology in Chinese cities. There are discussions about one more route, the so-called Western route between Russian and Chinese companies. And we believe there are good prospects for such a project. As when it comes to Power Siberia, it will start operating in the coming years, and in 2019 it will provide 5 billion of cubic meters of natural gas from Russia to China. Because we are very pleased that Chinese investors are very interested in participating in the Yamal LNG project, which is a major project in Russia. And we already have The Chinese banks have already said that they would provide around $12 billion to finance the project, and China will have a share of around 30% in Yamal LNG. And there is already a long-term contract between Russian and Chinese companies for supplying around 3 million tons of LNG a year from Russia to China from Yamal LNG. There was, on the 1st of January of 2017, the Russian-Chinese agreement on the avoidance of double taxation will enter into force, and we believe it will help our investment cooperation. And of course, we try to integrate our initiative of the Eurasian Economic Union and the Chinese One Belt One Road initiative. And there is a project for a Moscow-Kazan high-speed railway connecting to big cities of Russia, and many more. Unfortunately, I do not have time to mention all of the projects that we have, but we still that all these projects together will help us boost our trade and investment cooperation in the future and really reach new level of our in our economic cooperation, which is lagging behind compared to our political interaction. Thank you.
Thank you very much. Let me just have a very, very quick and simple question on the possibility of Chinese financial institutions replacing the negative impact that comes from the financial sanctions from the EU. Because what we saw that there was some increase in lending from Chinese banks to Russia, but how do you see, is there a prospect for further increase there or not really?
Yeah, we believe there are good prospects here, and this is something that our governments are are working on, and we think it will have effect. But I would not connect it directly to sanctions. Still, it is recognized even by the United States that currently the effect of Western sanctions on Russia is de facto zero. You can read it in Western media, and it is quite clear. It does not influence the economic development of Russia anymore. What has produced a negative effect is the decrease in oil and gas prices, of course.
Thank you. Very interesting comment. Now, Mr. Sam, please.
Okay, thank you. I fully agree Mr. Vasilis' comment on the political relations between China and Russia is on the unprecedented high level. And so my key points are mainly on the economic side. So first, I believe that there are huge potential between China and Russia in economic field. He mentioned at least the four major fields. That is the energy and infrastructure, financing, and the technology. In energy, not only the gas, natural gas, and oil, but also the nuclear energy. Russia is very strong at this point, and also the technology. Maybe you are not very familiar with that cooperation. We are exploring the cooperation on this long-range wide-body aircraft, and also on the heavy helicopter. Yeah. So last year, our bilateral trade volume decreased, but the absolute volume of import of energy from Russia is increased. The decrease is mainly due to the lower international oil price, commodity price. But we are quite aware about that. We want to try our best together with our Russian friends to make more input this year to try to reach the goal of $100 billion US as soon as possible. Secondly, and China EU economic relations have a very bright prospect. Last year, we celebrated the 40th anniversary of the diplomatic relations, and we have reached a consensus on 5 priorities. The first is synergy between the One Belt, One Road and the Juncker Plan. The second is the connectivity platform. The third is the legal affairs dialogue. Fourth is digital economy cooperation. The fifth is MMD, it's migration and mobility dialogue. That is to further to promote this people-to-people exchange. So the third point is that I believe that the Russia so-called pivot to Asia does not happen after the Ukraine crisis, but much earlier than that. And from our statistics, from 2002, 2008, the annual, the average the trade, bilateral trade increased by 38%. So already in 2008, we have exceeded almost 50 billion US dollars in the trade volume. And so since Asia is the most prominent, Asia-Pacific most prominent area in this century, and Russia is a country of Asia-Pacific. So this is a historical trend for Russia to have on the one hand, the traditional focus on European market, on the other hand, increasing input in Asia-Pacific. And then the next point is that the China-Russia relations does not develop on the expense of the EU or the EU-Russia relations. I cannot agree with the argument frequently in the newspaper that China is the biggest winner of the Ukrainian crisis, because I think our cooperation, increasing cooperation is mutual beneficial. It's in the interest of our two peoples. And as China, we sincerely hope that EU-Russia relations could be improved, but it depends on you both. And I've been quite a long time posted in Finland. I know maybe I mentioned the very famous proverb, the tosiasiain tunnustaminen on kaiken viisauden alku. It's the acknowledgement of the facts is the beginning of all wisdom. So I think Russia and the EU, you are highly interdependent for quite a long time, even for centuries. So I think I don't want to link the decrease of market share in Russia directly with the sanctions, but you have your own assessment. I read some report from the EU chambers in Russia. The president is a German business leader. He said he's really concerned about these sanctions policies. If they continue for a longer time, so he will lose the European the companies will suffer magnificent loss from the Russian market. I think I can interpret this remark in another way. During the last years, the people-to-people feeling about the other part in China, in Russia, has increased dramatically. 80%, around 80, more than 80% of Chinese people or the Russian people believe consider the other side as a trusted partner. I think this will provide a favorable business environment for both for the companies of both sides. And then finally, that what's China's contribution to the improvement of the EU-Russia relations? We have this One Belt, One Road initiative. This is our attempt to provide the international public goods. And China, Russia, EU, we situated in the same continent, the Eurasian continent. I know that many Europeans said that when we are in trouble, we turn to the transatlantic community. It's your choice, but you have more option. The One Belt, One Road initiative provides a open, the cooperation platform for anyone who is interested in. China and Russia, we have agreed that we build a synergy between the One Belt, One Road and the Russian economic and the Eurasian Economic Union, and we have China, EU. We have also made a consensus. Now we are ready for your choice. So we are hoping that we together we can contribute a lot to the common prosperity of this continent. As President Juncker said, this geographic position is a simple fact. But the more we can do is have both sides have the shared responsibility for the common goods of the continent. Thank you.
Thank you very much, Councillor San. Just a very short follow-up question. You mentioned the possible synergy between the One Belt, One Road initiative and this European investment plan, which is frequently called Juncker plan. Just can you just very briefly, explain what synergies you see and what cooperations?
Yeah. At the expert level, we have had several rounds of discussion and how China can join the Juncker investment plan, and I think there will be a positive progress in the near future, because I think European side also attach much importance on China's involvement in this plan. If it comes into reality, that China will be the first outside the European Union to get involved in this plan and make a real contribution to that. Thank you.
We look forward to it. Now, Ika Korhonen, please.
Okay, thank you very much. I will basically just go over a few random thoughts and ideas that have been popping in my head during this morning's discussions. But I think it's useful to sort of frame, at least mentally, the discussion in a way that what we are witnessing is a sort of re-emergence of China as one of the big global players in economic but also in political terms. And many of the themes we have discussed today are actually related to that re-emergence, that we are witnessing something that is new during our lifetime, and it's perhaps not so difficult to understand why we sometimes have a hard time even grasping the concepts behind the developments. And I agree with the Councillor Sun on the emergence of China as the biggest exporter in the Russian market. It predates the current political problems, but also I think it's quite natural that China will become even more important in China, in the Russian market. And then because market shares sum up to 100, then somebody has to lose. And then it's, I think the previously biggest partner, EU, is the most natural candidate for that. On some other topics, I think if I look at China and Russia, where the complementaries lie, also, again, many times during this morning we have talked about energy. Energy is always also about politics, not just economics, and I think there's clear political will and there's clear economic rationale for China and Russia to become more integrated in terms of the energy sectors. Natural gas is one aspect of this, and there will be apparently big Chinese and Indian investment in various Russian energy companies, including Rosneft, which is of course not natural gas but crude oil. I think this further sort of cements the relationship, but then I do think that there's some, and there will be further cooperation in nuclear power generation. What form that will take, I don't know, but I mean, there's clear complementary or demand and supply will perhaps meet in that sense. On the political processes, both of the previous speakers spoke about regional cooperation, but I would be very interested to hear your views on what is happening in Central Asia, whereas we saw China has become more important in economic terms, but there are also many countries in that area that are sort of fragile in the sense that the political situation is quite difficult, and I would be very interested to hear how you view possible China-Russia cooperation in that area. On One Belt, One Road initiative, well, we have seen, I think, one map. Over the past 2 years, I have seen many other maps of that same, and they always end up in different places and go by slightly different routes. So it's a fairly sort of amorphous concept, but of course I do think that the sort of increased infrastructure investment on the route between China or East Asia or Southeast Asia and Europe is beneficial, and it's beneficial for both endpoints, and it will be beneficial for the countries that are currently in between, because they will also get more easier access to different markets. I will sort of close and stick to my 5 minutes by sort of wondering out aloud whether there will be more Chinese manufacturing investment in Russia. Currently, with this exchange rate, the average salaries in China are actually higher than in Russia. So just from that point of view, there is an economic case for that. But as we have seen, where the oil goes, then the ruble follows. So, I mean, nobody knows what the salaries in dollars will be tomorrow or 5 years from now. So just from that sort of risk-averse point of view, it's perhaps a bit premature to expect a lot of investment a lot of Chinese investment in Russian manufacturing, at least not in the sort of near the Chinese border. Perhaps if there is sufficient demand, as perhaps there would be in car manufacturing, also outside Russia, then perhaps one day we will see Chinese cars being manufactured also in Russia, but perhaps not this year and not next year, but so 5 to 10 year horizon. Thanks.
Let me also have a question to you, and it's regarding the economic slowdown in China, which seems inevitable. And one question, whether you see it will be a soft landing or hard landing, and what its implications for investment in Russia, because as you emphasize, there's a lot of prospect for investment in manufacturing and other sectors, but what happens if the Chinese economy would slow down even more significantly than current forecast suggest?
I think our sort of central projection is still of a fairly benign sort of soft landing, if you want to call it that. The growth will decelerate and the growth will rebalance, and that's all good and natural and has been expected for quite a while. At the same time, I think it's fair to say that the risks have increased over the past 2 to 3 years, and I think the way credit and bank lending has been used to boost growth, boost investment, and also investment in many areas that already have overcapacity, has increased risks of hard landing. I still think that it's the benign scenario is much more likely, but I cannot sort of deny that risks have increased. I think in the long run, China will be much more present in all countries of the world, and we will see much more Chinese investment in various places, including Europe and including Russia. Then on the way, well, perhaps 1 year or 2 years will be slightly lower inflows of investment, but then I think the overall direction is quite clear.
Thanks for this quite positive tone at the end. So Alicia, now the floor is yours.
Thank you very much. I'll be very brief because otherwise we'll have no discussion, and I talked a lot. So just basically 2 quick ideas. We had a Finnish saying, so I'll use the Spanish saying, which is una de cal, una de arena, which basically means that I'll start with the negative side of it and then move to the positive, and then, end on a high note and give it to the floor. But on the cal, on the negative, I can understand China's approach to this question, the friendship and everything you discuss, and it is very clear to me. But frankly, I'm more doubtful about Russia, and I'm not saying I'm right or anything, but I'm, again, on the negative or on the potentially, if you want, negative side, if I want to look at that first. And this is just because the concept of interdependence, no matter how you look at it, sometimes becomes dependence. Sometimes becomes dependence. And that's what I've seen analyzing. I understand those are regions that with a much lower income per capita, without the human capital that Russia has, with less helicopters. I understand all of that. But the reality is that there are regions out there in the world that have become extremely dependent on China. I'm not only talking trade, because trade-wise, we're already there. And I don't think there is any doubt in terms of trade deficit at the current prices. We'll see what happens in the future. But we go beyond trade. And if we think about prospects for lending, they are only in one direction. I don't think we're going to see huge amounts of outward FDI from Russia into China. If not, we're not going to see huge amounts of our FDI from anywhere in the world into China in the future for many reasons. And then we have bank lending, which is increasingly and probably in the future in one direction only. So I'm a little bit worried about this interdependence becoming dependence, as I mentioned. And if I think about my previous life when I was writing papers on contagion and the single lender channel and stuff that may look old-fashioned but can come back, with all due respect, and I know that these economies are very different to a large extent, but not to all extents. Think about Venezuela today, trying to restructure $65 billion with China, and it's just a huge dependence on a single lender. So that's on the negative side of the potential relation, meaning, you could be stuck with the Venezuelan problem is different. They are the ones that have the problems. But what about if your lender starts having problems and not being able to continue to lend, which is the old literature on the lender channel, contagion channel. So that's only a warning signal on this wonderfully positive relation that we heard, that dependence is indeed an issue. on the positive, the arena, as we say in Spanish, the positive side of the story, I want to go back to the Belt and Road, because that's where we see all of this triangle that we were trying to explore in this conference in a different order. Yeah, we see China, Russia, Europe being linked in a nice way compared to the current route. If we think about China's trade, as you know perfectly well, and Jianwei even better, I think it's about 70% driven by sea transportation today. Very different from Europe, which is mainly highway and, to a lesser extent, railway. So what about a world where railway becomes the major transportation means for trade within this landscape? So there I do see a win-win for Russia, China, and Europe, because that's what we are building. So I think that I think in Europe we tend to kind of, not avoid, but under-discuss this major transportation revolution, if I may, in trade that could happen. Of course, I want to be cautious, because whenever I raise this point, everybody reminds me, no way to compete, because sea transportation is so much cheaper, and and anything you see now is subsidized, as you know, by Chinese local governments trying to push this new railway routes. Yes, maybe, but maybe because the volume is not yet there. We don't really know what will be the equilibrium price once the volume really is there for railway transportation. And that's a big difference for Europe, because you are at the end of that route. And I think that could make Russia-Europe relations also, trade relations at least, also different, because you are at the other end of a route that has already been built. So in a way, we are recipients of a new, if I may, free, public good, if you want, in as far as this is China, basically, so far, paying the bill. So as Europeans, we should be quite positive on this. So I just wanted to give these two very different prospects on dependency on the one hand, and a major potential transformation in trade relations thanks to the Belt and Road investments, especially on railway transportation.
Yeah, thank you. Thank you very much, Alicia. I'm sure that the first Secretary Gavrilo would respond to your worries about independence or dependence, sorry. But before that, let me open the floor, because we are running out of time for questions and comments, and we collect a few, and then I will give the floor back to the panelists for short remarks in a reverse order. So Alicia will start. Now, who would like to ask a question or make a comment?
Well, it's about Ika's remarks on the prospects for growth in China, of course. I think the difficult thing is that the slowdown has already started. It's not that it's in front of us, it's behind us already. So we were both in China over the last weeks, and we know that in there some authority has mentioned L-shaped movements. We don't know who is that. Well, nobody knows. But in our numbers, this is definitely the case. And I think this is linked to other comments about the issue of debt in China. Basically, the story is China currently like Japan in 1980 or Japan in 1990? So is it going to a slowdown of, say, 2%? Or is it going, per capita? Or is it going to a slowdown of 0? That's a sort of Japanese two-stage story. So it's a question.
Any further questions or remarks? Well, maybe all of us are exhausted a bit after this long day, but as I promised, let me give back the floor to the panelists if they would like to respond to each other. If Alicia not, then Ika, maybe.
Okay. Well, Eric's question is, of course, very, very important, extremely important. If I had to choose, I think I would go for Japan in 1980. Basically because I think there's still room for productivity improvements in many Chinese sectors. And there's a lot of R&D activity and so on that will hopefully support transformation of many sectors, at least those that have more competition. But yeah, it will be interesting to watch.
Yeah, you wanted me to comment on dependence and interdependence. Yes. Just, I think we should stick to the figures. Currently, the share of China in Russian foreign trade is around, I think, 12%. This is not too much. The European Union share before 2013 was around, it used to be 52, 53%. Now it's around 46 as far as I remember. And when it comes to exports of energy, of oil and gas, our dependence on China is not huge, and probably it will not be huge, even with both the eastern and the western route possibly. Still, I think we cannot speak of real dependence. But you should also not forget. You should not forget that Russia is also an Asian country, and a large part of our territory and our population is located in Asia, and we really see that it is absolutely essential for Russia to integrate in the Asian market. And China is the biggest Asian power, and it is only natural for Russia to boost its trade and economic cooperation with China, as well as with the rest of Asia, of course, as well. Still, again, when it comes to energy, we are more dependent on the European Union. Yeah, still today, despite all the public statements about EU's dependence on Russia, in fact, it is probably the opposite. Thank you.
Thank you. Councillor Sun, would you like some final words, please?
Okay. First, the dependence and interdependence question. I think if you interpret this issue only from the lender, the point of view, I think this is too simple, because we invest a lot in Russia. Because we believe in is long-term growth, and it's an action from the enterprises. It's a decision made by the enterprises, and if I give you a comparison, if I lend you 100 million euros, do you think you are subordinate to me or on the vice versa?
It depends on how big you are.
Yeah. So it's so even in this way, it's interdependent, and also the China in the next 5 years, the China's outbound FDI will accumulate to 500 billion US dollars. So, but 30 years ago, can you imagine? We are the main destination country to receive FDI. I think the same story will happen in Russia, maybe in a shorter period than China has experienced. Then the One Belt, One Road, I agree with you that it's an opportunity for the EU to grasp, because when we talk about this, the 21st century is the century for Asia. or Asia Pacific, it makes European as an outsider. But if we, China, Russia, the EU, we make the joint efforts to boost the prosperity of the whole continent, then there will be also, this century will be a century of the Eurasian continent. I think this is our shared future. And also, we have witnessed the early harvest in this project for the multiple win for either, every one of us, each of us. That is the freight rail cooperation along the Silk Road. We have now opened more than 10 pairs of 10 the freight rail delivery connecting more than 10 pairs of cities in Europe and in China. Every route passed through Russia. So it's already an early harvest, and there are also more results in the future. Thank you.
Yeah, thank you. Thank you very much, and thanks for all the panelists, both in my session and also in the previous session. I think it's very difficult to close such a rich discussion, but I think one very key conclusion is that there are many unexploited opportunities in the economic cooperation between Russia and China, which also have a lot of positive implications for the EU. So I think for us at Bruegel and at BOFIT, I think our role as an economist to make good suggestions how to progress in this process further. So with this closing note, let me thank for all of you, also for the audience for coming and participating in this very exciting workshop. So thanks very much.